Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thank you for joining us. So as we sit here today, the NASDAQ is now officially in correction territory and the S&P is very close. Correction is measured by a 10% from peak to trough sell-off in the markets. And so we are here to certainly acknowledge that it's not pleasant. Any market sell-off isn't pleasant. And we understand a lot of you have an impetus to want to do something. But we want to remind you that doing something negative, like going to cash or getting really conservative in a bear market is almost always the wrong thing to do. But we understand that a lot of you are nervous. A lot of it has to do with which side of the political aisle you sit on and how you're interpreting this sell-off. We try to look at markets and the economy without any political bent and just see what's happening. And so we understand, though, where you're coming from and being stressed out. The thing that markets hate the most, by far, is uncertainty. And we have a lot of uncertainty. When you look at the Federal Reserve or the U.S. Treasury or even the government in general, nobody for sure knows how this tariff situation is going to play out. And so I think that's why markets are selling off the most. As Josh has said, this was sort of a market looking for a catalyst to sell off. Remember, markets were very expensive at the end of last year, and so the tariff talk is sort of the main catalyst for markets to be selling off. And that uncertainty around tariffs has a lot to do with it. Remember, stocks are forward-looking, and so none of the tariffs have actually had any impact on the economy yet, but because markets are forward-looking, that's why people are sort of saying, I'm going to sell now and worry about it later. We are not urging you to do that. In fact, we are quite happy with our asset allocation and where we have your money situated, because remember, we're never going to be one of these people that chases markets on the upside, or when markets are bad, put all your money in bonds. We're going to have a global asset allocation that is going to be enduring across all markets, and Josh can talk to that.
Yeah, we certainly appreciate the desire to want to be proactive in the midst of the crisis du jour. But remember, this highlights the importance of asset allocation and why you own the things that you own. And I'm reminded, of so many conversations I've had over the last couple of years where clients would point to a couple different portfolio allocations, namely low volatility stocks and international stocks, and ask, why do we own these? They never seem to go up. Well, international stocks are now up 11% year to date. The low volatility exchange traded fund that we own across all client portfolios is actually beating large cap stocks now on a trailing 1 year basis. This is precisely why you own them. Do not respond to the crisis du jour with a hectic reaction. Again, there's a lot of uncertainty as to how this plays out, but asset allocation is ultimately how you smooth your returns over time and how you ride out these types of uncertain environments where there are asset classes that are actually doing well, and we own them precisely because they offset when the main U.S. stock market isn't doing so well.
Yeah, and then also the bonds in your portfolio are holding up really well because that's generally where people go is they sell stocks and buy U.S. Treasuries, which is why yields are coming down, but bond prices are going up. So rest assured, we really like our asset allocation. There are parts of our asset allocation that are doing really well in this U.S. stock market sell-off. And so on a relative basis, our portfolios, your portfolios are holding up quite well. So as always, if you have questions about your situation or your account, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.